Hey guys, Omar Khan here with Theta Trading, and I wanted to just talk today about Tesla earnings. Will Tesla be worth 600% more in the years ahead? We're going to dive into that because that's what Elon Musk said. Not my words, his words. Now, before we do that, I want to ask you guys a favor. If you guys could be so kind as to hit that like button, hit that subscribe button. If you want to learn more about what we do here at Theta Trading, please take a look at our website, thetatradingco.com, or book a call with us and see if you want to be part of the Theta community. All right, so we're going to put that in the corner as well. Book a call with us. Now, let's get on today's topic. Will Tesla increase in value by 600% plus? Well, where do you get that number from? 600%. Well, what we're doing is we're not coming up with this number. We're going to go based upon what Elon Musk said. Now, yesterday, Tesla reported their third quarter earnings. Now, the street didn't like it too much. It actually kind of punished the stock by about $17 today. I'll get a little bit into that. But let's take a look at what happened behind the scenes. What is Elon Musk and the company saying about Tesla? So let's take a look first at this article. So Elon Musk says Tesla's value could soar to $4.4 trillion. Twitter might be worth $400 billion. Now, I don't really care too much about Twitter because I'm not a Twitter shareholder. But I certainly do want to focus on that first part here. Let's take a look at what it's worth today. All right. Now, the reason I want to pull this up while we're doing this is so that it's live. Now, this is reflective not of what happened today, but it is reflective of what's going on. Now, let's take a look here. So the market cap currently is $650 billion, $649 billion. Okay. And that's not counting today's little bit of, actually quite a bit, 6.5%, almost 7% there slide. Now, we're at $650 billion. Tesla just reported earnings yesterday, so I want to go over their earnings. Okay, now why does Elon Musk think this could be worth $4.4 trillion? Again, if you're at $650 billion today, that is over 600%. That's almost a 700% return from where we are today. So even though the stock has gotten killed, these are the things that we look for as investors, because we are long-term investors. However, sometimes we are left in a position where we have to be able to weather the storm and go through very tough years like this year. Okay, so Elon Musk says Tesla's value could soar to $4.4 trillion. Like I said, that is a 7x from where we are today. It's almost 700%, over 600%. These are not my words again. Okay, these are his words. Now, what is he saying here? Elon Musk says Tesla's market value could surge to more than sixfold. Okay, that's the 600% to over $4.4 trillion. Okay, and again, he says Twitter could be worth $400 billion. I'm not a Twitter shareholder, don't really care. That would be about a 10x for Twitter. Okay, now why is he saying this exactly? And what exactly did he say? Well, he says, I see a potential path for Tesla to be worth more than Apple and Saudi Aramco combined. Okay, I see a way for Tesla to be roughly twice the value of Saudi Aramco. Now, Saudi Aramco is worth a little over $2 trillion. Okay, so if you were to double that, that'd be $4 trillion, and that is how we come up with that 600% increase from the $650 billion we're at now. So even when things seem very bleak in the markets, when they seem bleak and you're like, oh, you know, the markets are terrible, and it has been a terrible year, 2022. Terrible year. Trust me, I'm feeling it. I've got lots of real estate. I've got lots of stocks. This has been a crappy year. Terrible. No fun. But for those who have capital, it will also be a year of tremendous opportunity, most likely. Okay? If you were able to average down into your favorite companies at these levels, history suggests, and watch some of our previous videos, history suggests that you may do quite well in the years ahead. Okay? There's a few things I want to talk about here. So the first is Tesla currently has $21.1 billion of cash and cash equivalents on hand. That means they have a lot of money. And they can do certain things with this money. They can build new gigafactories, which they don't really need to right now because they haven't even ramped up Austin and Berlin yet. They could buy new companies and integrate those companies into Tesla, therefore increasing their revenue. They can do that. They can pay dividends if they wish. Dividends would be a portion of the company's profits because we are shareholders. They have $25 billion sitting around, okay? And by the end of next year, if their projections are correct, they'll probably have around $50 billion. And again, no need to build a new a gigafactory, No need to build any more infrastructure in a meaningful way. Now, they might have to wait a year. They'll eventually build more gigafactories, but for now, there's nothing to do. So if you have $25 to $50 billion of cash on hand, and your stock has gone down by 50%, what a good use of money that may be to go ahead and buy shares using the company's money when the price is low like it is now. But the reason I think they're not doing it until 2023 is because we don't know how bad the economy and therefore the recession will be. Let's talk about inflation. We know inflation is a problem. But look what Elon Musk said here. Commodities are dropping a lot. That's a good sign for inflation, right? But electric vehicles, things like battery-grade lithium are still crazy expensive. Why? Because there is a very high demand and supply hasn't caught up yet, okay? We've got a mixture of things where prices are dropping and things where prices are increasing. But there's more deflation than inflation. I want you to look at this. Now, this is important because this is someone who's at the forefront of manufacturing. If they're saying there's more deflation than inflation, then that could be a good idea for us as investors. And maybe the Bank of Canada, the Federal Reserve, don't need to increase interest rates as much as possible. The whole point of doing that was to tame inflation. And he's saying there's more deflation than inflation. That's an interesting thing. So that tells us that the Federal Reserve may pivot soon, may not be as hawkish, meaning as aggressive. They could become dovish, which means maybe even lowering rates, which would be great for the stock market because the stock market is a forward-looking mechanism, okay? Now, these are all things we are looking at, okay? Now, here's another thing he says here. The Fed is raising interest rates more than they should. But I think they'll eventually realize that and bring it back down again. The Fed is not listening because they're looking at the rear view mirror instead of looking at the front windshield. Interesting comment. So the stock market is a forward-looking mechanism. It prices in today what it sees happening in 6 to 12 months. And what Elon Musk is saying is you guys are hurting the economy too badly because you keep raising rates. And the whole point of the Federal Reserve raising rates was to lower inflation. In the next little while, they're going to be producing a car which may cost half as much of the Model Y and Model 3. Now, what does that mean? Okay. Well, if you're producing a car that's half the value of the Model Y and Model 3, the Model Y is one of the most popular vehicles in the world right now. But it's still very expensive. Okay. So if you produce a car that costs half that, and they won't compromise on their quality or their first focus, which is safety. It's over for the internal combustion. The gas industry is going to be annihilated with that car. Because why would anyone in their right mind buy a gas car when you can buy an equivalent electric vehicle that costs far less in terms of operational costs? Sticker price may be very similar, but operational costs, wait, you're not paying for gas anymore. You're not paying for all these things. This is a good spot to be in. So these are things that I took away from the conference call, the earnings call yesterday. I was very encouraged. So Tesla reported $1.05 per share, topping analyst expectations of 99 cents per share. But the stock dropped about 6% today, 5% after hours. Now, they came in at $21.45 billion in top-line revenue, whereas expectations were at almost $22 billion, slightly below. Now, the company has lost 45% of its value. The stock price has lost 45%. That's a big number. Now, the question is, why did they go so much lower than the $21.96 billion that was expected by Wall Street? Well, it's because they produced 365,000 vehicles this quarter, but they only delivered 343,000 vehicles. 22,000 vehicles did not get delivered. They were produced, just not delivered. Now, those will probably go into Q4. Now, what Tesla has done in the past is they've scrambled last minute to get these vehicles out to different destinations, oftentimes at high cost to them, transportation costs, right? They're saying, we're not doing that anymore. We don't care. We're going to let it go to the next quarter. We have lots of cash. We're not a new company anymore. We're not going to do that. And I'm happy as a shareholder that they're not doing that anymore. Now, it may stink in the meantime. You're going to be slightly below, but I know that's going to eventually come up because what they also said yesterday is they said, Elon Musk said, we will sell every car that we can produce for the foreseeable future. Now, he also said, I wouldn't say it's recession-proof, but it's recession resilient because basically the people of Earth have made the decision in large part to move away from gasoline cars. And I agree. It's a very good spot to be in when you're the only manufacturer in that industry that is growing. And all your peers, right, your legacy, like your Volkswagens, your Hondas, your Toyotas, and again, keep in mind, this is one segment of Tesla's business. They are experiencing massive declines in their volume. Now, they're going to blame that on supply chain issues. But Tesla's growing a substantial sum. There's problems that are affected by supply chain issues, but they're still growing a substantial sum. So I'm not looking necessarily at today. I'm looking at what's going to happen in the future. Right? So I see every day, anecdotally, I look around, I see more of electric cars in the vehicle every day. So I think eventually that almost all vehicles will be electric. That's my thesis, okay? Now, I know that Tesla's by far the leader in that in terms of scale, in terms of profitability. They are doing fantastic. They have industry-leading profitability when it comes to the delivery of electric vehicles and the production of electric vehicles, okay? They're not like, traditionally you have gross margins of most auto manufacturers of, let's say, like 11 to 14% or so. Tesla's running almost 28, 29, 30%. And I think this number will move into the 30%. Now, what that means is if they sell a car for $100,000, if it's a 30% gross margin, that means 30% of that is profit. Now, compare that to a company that's selling a $30,000 car and only 12% gross margin. That will only be $3,600. Big difference. You have to sell a lot more of those cars in order to meet the same profitability. Elon Musk also said that he thinks this $4.4 trillion valuation, I want to highlight this, okay? That is almost 700%. That means for every $1 invested, if Elon Musk is accurate and right in his prediction in the next few years, your $1 will turn into $7, okay? Those are good returns, right? For me, that's a great risk-adjusted return because I believe in the story. You must do your own homework. Now, if he is right here that this goes from $650 billion today to $4.4 trillion, it is an amazing opportunity. Absolutely amazing. And this is why, guys, we stick to our strategy. We like to buy companies that we want to hold, and we hang on to them for a long time because anything can happen. And the reason I want to point that out is all these numbers are trending the right way. But look at the one-year performance of this stock. In November 1st, 2021, the stock was at $407. Look at it today, $207. Almost cut in half. And the company has never made more money. Never. It's never been more profitable. But look at the decline of the stock. So the reason we invest the way we do, and the reason we use options to do so, is because the worst thing that will happen is we're going to own this stock. Well, if we believe in the future of the company like Elon Musk does, that it's going to increase by 600 or 700%, well, we certainly don't mind owning the stock. And that is why we stick to our strategy. So if you guys want to learn more about our strategy, let us know. I hope I've enlightened you a little bit about Tesla, what they plan on doing in the future, what the earnings are like, and not to panic in these environments. Don't get stressed out. Don't worry about the media is telling you. They're going to tell you the world's coming to an end. Your job is not to listen. The more they tell you the world's coming to an end, the more likely that we are to the bottom of a market. You focus, and us as investors, we should focus on earnings. Exactly what happened here. We focus on how much money did this company make, because ultimately, that will determine how much it's worth. I hope you guys enjoy this. Omar Khan here from Theta Trading. If you want to learn more about what we do here, like I said, hit us up at thetatradingco.com. Book a call with us. Leave a comment as to what sort of things you'd like to see in the future, and obviously hit that like button, hit the subscribe button for future videos. Take care and talk soon.